Hey everybody, welcome back to Ryan Makes Sense. Today we are looking at part three. We're reviewing stocks that was created based off of a Tesla scanner before Tesla ran 1000%. We grabbed the financial data points from Tesla, and I'll go ahead and move my face so you can see. So we have financial data points before Tesla ran to 1000%. We created a scanner. I reviewed the first three stocks in part one, the next three stocks in part two, and today we're looking at the next three stocks: GLBE, ITCI, and TDS. And then we'll wrap up the last two stocks in a part four video. And the only reason we are breaking them up is because the videos go from 15 to 40 minutes. So without further ado, I'll stop talking. Our first stock we're going to look at is ticker symbol GLBE, not T. This is GLBE Online. This is an Israel company. Let's go ahead and load our institutional and hedge fund data right now. We're going to do some advanced charting, obvi. All right. Ooh, I like where this is looking. Okay. We look at the bigger picture because that is what we do. Beautiful doji candle right here. You can see this beautiful green buying right here. I mean, this is looking ready for a move. Unless they have earnings. Nope, earnings have already passed. So yeah, this is pretty good. Okay, the strength looks pretty neutral at the moment, not with the Bears or the Bulls. The momentum looks like it's kind of with the Bulls at the moment. Money flow is going down, however, we will challenge that. And our relative momentum indicator is kind of going back towards the bottom of the ocean. Okay, wow. So, they are not profitable. They have a great quick ratio, very low debt. Earnings per share the last 5 years and sales are fantastic. Gross margins are perfectly high. I mean, this is looking really good. This is what we love to see. They did 569 million in 2023. Already for 2024, the trailing 12 months, we're looking at 632 million. So 2024 is on track to do better than 2023 if they can keep up the momentum. And the EPS, I mean, this was a huge negative 2,300, I'm sorry, negative 230 here. And then we can see they got better, got worse, got even more worse. And now they've gotten a little bit better, and we'll see where they're trending towards now. Let's go ahead and open and run our proprietary stock price calculation. This will give us an idea of which way the stock should trend. So they have a market cap of 5,680,000,000. Good for them. Negative of 109,680,000. Sales of 632,890,000. All right, let's go look at their cash and their debt situation. Okay. Before we do Q1, they brought in 145 this year. Q1 last year, 117. So a $28 million increase. 168 million in Q2, 133 million Q2 last year. So that is a $35 million increase. Cost of goods spending did go up. However, gross profit is up as well, so that's good. Gross margins, 44%. That's the most efficient quarter they've had, which was Q2. In terms of getting it into profitability, let's see. Q1, they were negative 32 this year. Last year, they were negative 43. Q2 this year, negative 22. Q2 last year, negative 35. So they are getting better. Looking at 50, 60. Trying to see their EPS. I mean, earnings per share is better, a lot better, $10 million better in Q1, about 10 million. And then in Q2, it was over 10 million better, barely. So it looks like their EPS is getting better. All right, looking at their cash. Come on, baby. Cash. Stop. Okay, cash, they have 300. What the heck just happened? All right, we're having some technical difficulties, I guess. Okay, cash, they have. I just want to move you. I don't want to close you. 341 million. Come on, baby. 341,500,000. Debt they had, it was very little. 18 million. Did it not get saved? What's going on? 341,500,000. There it is. Debt is 18,240,000. Okay. I'm just gonna double check the numbers here. So yes, we have 341, 18. Okay. Total assets 1.1 billion. Total liabilities 251. So assets dwarf liabilities 4-1. That is fantastic. We see this affiliate selling 1.6 million shares for $52 million this last week. That's crazy. Okay. All right. Going back up. 5.68 billion. Yes. Negative 109 million. Yep. 632. Yes. Okay. So shares outstanding. Not this again. Not this again. Not this again. 165,770,000. Yes. Okay, $39.37 stock price. Currently trading at $34. Analysts have a price target of $42. Morgan Stanley 37. So institutions own 54%. That is old data. New data shows that they actually own, drumroll, 83%. And we are tip topping at all-time highs here for institutional ownership. So that is great. Morgan Stanley added 1.72%. Dragoneer Investments sold 2%. Shopify owns 5%. Virtue Partners sold 68%. And Deutsche Post AG sold 6.61%. So overall, we've got some buys. I want to see if we have any ownership by Vanguard really quick. We do. 175,000 shares. They added 19%. I'm guessing BlackRock also added if they have a position. Yep, BlackRock has 3.6 million shares. They added 4.3%. Huge. Okay. So we are looking fantastic with this candle here. I mean, does it get any better than this? Let's go here. I mean, this is a very bullish candle. I would say watch $42 for the month of September. And what was my price target? 39. So I think we get to 39 in September. I think we get to 42 potentially. This could be a really strong move right here. So I'm definitely interested in this. And I'm excited, honestly. I mean, let's just do this here. Look at how well these candles respect this Fibonacci arc. I mean, great test of support, perfect support here. Test our inner candle. Great test of the inner candle, breaks up. Great support, great resistance, great test of support, perfect resistance there. perfect resistance, and we're out. So, yeah, I think we've got big and bright things on our horizon for GLBE. I got it noted down. We're ready to move on. Great, great looking stock. Next is ITCI. ITCI. Intra-Cellular. Wow. Whoa, whoa, whoa. Geez, I'm so sorry. There we go. Wow. It stayed in this channel. I can't believe that. That is absolutely crazy. I don't even know when I charted this. It was probably when the stock was $43. Wow. Okay. We'll come back to that. We're gonna run our typical process here. Okay, so all-time highs for the stock. Congrats. It looks like it's with the bulls, with the bulls, with the bulls, and with the bulls. That's RSI, MACD, money flow, and relative momentum. They're not profitable. Wow, they're very expensive. I'm excited to see what my calculation comes to. Quick ratio, perfect. Debt, very low. Sales, past 5 years, 7,000%. EPS, 12%. They're resilient. I mean, this is what you want to see right here. This is what you want to see right here. 2023, they did 464 million. 2024, they're doing 564. So they're $100 million ahead on the trailing 12-month basis, which is good. Shows that they're on track to beat 2023 levels. Institutions own a lot of this stock. 92% gross margins. That is absolutely incredible. Wow. All right, let's run our calculation here. Let's just clear it out. All right, $8,140,000,000 market cap. Not profitable, 84,300,000. And they do 564,530,000 in sales. Good for them. Yeah, this is good. Shares outstanding 105 million in 2024, 96 million in 2023. So it looks like they added about 9 million shares to the float. Or we've got some massive insider selling. We'll see. We'll see what's going on here. Q1 this year they did 144 million. Q1 last year 95 million. So that's about almost a $50 million increase. Q2 this year 161 million. Q2 last year 110 million. That is about over a $50 million increase. Good for them. Gross profits rising steadily. That's just fantastic. Gross margin 92%, in line with what they've been doing. A lot of selling. CEO is Sharon Mates. She has 1.1 million as of January. Latest we have for Sharon, she sold out 1,500,000. So she's been holding on to that $1,050,000, 1,050,000 share position. Continuing on with our calculation here, apologies. Wow, they've got $1 billion in cash. 1,024,660,000. That is insane. And very low debt. 14,120,000. Wow. Wow. Okay. Wow. I'm in shock. And let's go ahead and see what we've got here. 105 million shares, 670,000. So we've got a potential stop price of $91.14. Analysts have a $94.40 price target. I'm in awe. I'm in awe. Okay, institutions own 91%. However, I'm going to say they own more than that. I'm going out on a limb. So old data says 91%. New data, 104. So that is a 15%? No, 13% increase. All-time high institutional hedge fund ownership. Ding, ding, ding. We got a winner. Wow. Vanguard added 9%. FMR sold 4%. Wellington sold 67%. BlackRock added 9%. Wow. This is a keeper for sure. Keeper for sure. I mean, it's gone up 1000% in 5 years. So I am bummed I did not buy it at $6. Wow. Wow. So, yeah, I like this one a lot. In fact, it's perfect. Let's make this purple and thick. Okay. In fact, I would buy some of this, even at $76. ITCI. All right. Wow. Okay. I don't know what else to say. This company is on pace for 90 plus dollars. Uh, their sales are just killing it. They're continuing to kill it right here. Gross margins are insanely high, heavy institutional ownership, EPS turning around. I mean, come on. Like, this is crazy. So, yeah, I would buy this one tomorrow. So, uh, this is a good one. We're gonna move on to the next stock. I don't know what else to say. TDS. This one sounds very familiar. Ooh, breaking up. Okay. To the upside. All right. Let's see what we got. Wow, it was trading at $6. Now it's at 20 bucks. Are they getting bought out? Let's see. US Signal to acquire. Is this US Signal? No, this is Telephone and Data Systems. Uh, okay, so it looks like they sold part of their um, business, TD Telecom, to transfer ownership of two Virginia companies to River Street. So, yep, sale of US. So we'll see what's going on here. Sales have plateaued. We're at 5.09 billion. They're not profitable. Quick ratio is good. Debt potential concern. We'll look at it. Uh, gross margins are nice. Again, not profitable. Institutions own 84%. I'm just they're only at 5.09 billion for 2024, so it looks like sales are going to be going down. And they do offer a dividend, so my calculation is going to be on the higher side because it does not account for the dividend. All right, so market cap of 2.34 billion. Income, they're negative 542 million flat. And they make 5.90 billion. One too many zeros there. Okay. Yeah, I'm just concerned that sales are going down here. Q1 this year they did 1.2 billion. Q1 last year they did 1.3 billion. However, their gross profit was the same, so that's actually good. Q2 this year they did 1.2 billion. Last year they did 1.2 billion. Gross profit is higher though for this quarter compared to last year. So even though they had more revenue last year, they spent less money to make more money. So their gross profit was actually $8 million more, and they spent $37 million less. So that's pretty efficient. Gross margin 38%. That looks like they're topping out at 38%. That's really good. In terms of their net income, so they had a huge charge here. So they're typically not this unprofitable. Looks like there was a charge here for the end of last year. So the net income is typically going to be around 30, negative 30 at the moment. Um, However, Q3 this year, they're negative 14 million net income. Q2 last year, they're negative 19 million. So they're on the right path. Q1 this year, they were profitable. Q1 last year, they were negative 9 million. So again, they are on a good path, and this company will actually look a lot better mid 2025. And I say that because this negative 523 million charge is going to be dropped off, and we're going to have one positive quarter, one negative quarter, potentially a mix of positive negative quarters for net income, making them profitable. So um, this company it's looking good. Back to our calculation. They have 346 million flat. Debt, they have a lot. 4,976,000,000 flat. Okay, total assets 13.8 billion, total liabilities 7.8 billion. So assets dwarf liabilities almost 2 to 1, not quite. No red flags down here. Let's go back up, go back up, go back up. Okay, and our shares outstanding 106 million flat. Now remember, this stock price will likely be higher than normal because we are not accounting for this right here. This company pays a dividend, which is giving away their cash, which again, my calculation does not account for. So we get a stock price of $21.30. The stock is at $20.71. Analysts have a target of $39. Jeez. JP Morgan changed their target to 38 bucks. What the heck? And I guarantee you that's on purpose. That's manipulation. That is a type of manipulation. Institutions own 84%. New data shows they own 98%. So obviously institutions are buying, sorry. We can see this is a nice move up in terms of overall ownership. Vanguard added 0.56% earlier this year. Dimensional Fund sold 30. Invesco sold 70%. BlackRock increased 2.6%. And State Street sold 4%. And you know what's considered manipulation? JP Morgan says this stock is worth $38. This was on August 8th, which was somewhere in here. Let's see. Let's see what the stock price was on August 8th. The stock was $20.76 on the close of August 8th. JP Morgan gave almost a 100% increase. And you want to know potentially why. Oh, funny. JP Morgan owns this stock. Not Morgan Stanley, JP Morgan. They sold? Whoa. That doesn't make sense. On August 8th, JP Morgan said the stock should be worth $38. On August 12th, JP Morgan sold 40% of their stake. Is that pump and dump? I don't know. Anyway, going on. JP Morgan again. I mean, JP Morgan has this stock in so many of their funds. Probably not anything crazy. It's just wild that they would sell 40% after saying the stock is worth 38 bucks. So I'm baffled on that. Let's look at the charts. So, oh man. I apologize. I apologize. My mouse needs to be thrown out. So it looks like we're working our way towards this channel if we can get back in it. 24, $25 is going to be some resistance. Yeah, I'm just worried their sales. Let's just see. I want to see if they're guiding for the rest of the year. Come on, baby. I want to see if they're on track to do better than 2023 with 2024. So let us see. Maybe. Okay. Uh, nope, nothing. Man, the Zach's auto-generated articles kill me. I just want to see if what their guidance is for the rest of the year, if they're on track or not. So while this loads, we can talk about the stock. I still can't believe JP Morgan gave it a price target of $38 and then sold the next couple days. So wild. Yeah, I mean the momentum is with the bulls here. Gaps are being closed, gaps are closed. I mean, this probably will continue its leg up, in my opinion. It's by Zach's research again. Come on. Outlook. Okay. Nothing. So 2 to 3 billion. So it looks like they're going to be 2023 it will do better than 2024. However, the company does look like they're getting stronger and more efficient with their margins that we saw and the cost of good allocations. Just going down. So they sold to T-Mobile. So okay. So I mean, it's just going to be interesting to see how their income looks for 2025 with these assets gone, well, being sold. Obviously, they're going to get compensated for the assets, but overall footprint grew, delivered okay, operating revenues grew. I want to see the company. So telephone and data systems. Diversified telecommunication company engages in provision of communication service, retail, wireless connections, broadband video, and voice connections. Operate so it's selling its U.S. Cellular, TDS Telecom, and corporate eliminations and other. The U.S. Cellular segment. Okay, so They don't offer like cable, which is what I was wondering. Our business. Okay. Very cool. So again, they're getting rid of their US cellular right here. So TDS, I mean, this is a huge stock. They make huge money. Their profitability is going to look a lot better once this drops off. And the company is getting better with their gross profit spending. So I don't know. I'm iffy on this one. I regret not buying it at $6. I'd seen this one before, very low, and yeah, looks like a potential long-term opportunity if this company continues to do well. So let me know what you guys think. Thank you for sticking around if you made it this far. Leave a comment or subscribe and have a great day. See you tomorrow.